good day. You're having an afternoon tea with Travis on here today, Friday, December 12th. I waited to record this video and give you a little insight before you go into the weekend. There was some whipsaw trading going on both in stocks and mortgage-backed securities today, just based on some goofy stuff going in the market. First, we had the big three bailout with the automakers fail in the Senate after it passed in the House. That got turned down by the Senate, so stocks plummeted. Mortgage-backed securities were trading all over the place. And then the Treasury came in and made a surprise announcement that they're going to help the big three. So our US Treasury is now helping the big three, not taxpayer money. So apparently with this announcement, it caused our dollar to go on a huge plummet against the yen and some other foreign currencies, which is not a good thing. But we can't just keep printing money all the time. So it caused our dollar to really spike in or drop in value. Which surprisingly did not change oil prices much. Oil actually was down $3 today after the last few days of some big gains based on lack of production by the OPEC, as well as just the dollar weakening in the last few days, and even more so today. So to see the oil drop $3 was a good thing to see. The Dow was actually trading in a range of 335 points up and down. It actually closed up 65, I think it was. And then mortgage-backed securities were trading also in a huge range at 100 basis points. So it traded in a whole 1% range for fees. So that's a lot of money. But unfortunately, it closed up 16. So going into the weekend, we're looking at 4.875 on a 30-year fix still, with the APR around 5.124. So that's, I mean, we're talking rates at 5 or 4.75 for a 30-year fix. That's a pretty amazing thing to see. So that's the real good news. It's interesting to see where the dollar's going to go. Hopefully the dollar will recover some ground here and not continue to lose ground that it's gained so much over the past several months. So we're looking good there. Outside of that, going into Monday, there's some economic reports that come out next week. It was kind of a slow trading week with reports that came out. The Producer Price Index, the PPI, which is a good measure of inflation for our government to know what to do with the Fed funds rate, as well as just a complete measure of inflation, was down, actually lower than expectations. So because of the 11% drop in oil prices since last reading, that's a big impact on the PPI. So things are good. I mean, things are looking better. It's interesting to see January how it's going to be. There's analysts are expecting with the Fed cut next week, actually a week from Tuesday. I think they'll cut that down to at least 0.25%. So we'll have prime rate at 3.25, which is amazing. So that's the update for today, Friday. If you have any questions, give us a call. We'd love to serve you, and we look forward to helping you. So be blessed.